let's get into today's lesson, how to trade slow at market conditions. Haven't had to do this in a while. I know I just got into this, but I want to kind of re-record this. But let's get into slower market conditions. Seen this, of course, over the past couple of months. Been this way since since late February. We've seen number one top gainers giving back gains. Haven't been this way probably since late September, October, November of last year. It's been a little bit longer now. We're kind of still in that slower market condition. So there's many things to do and still many ways to profit when it's slower, right? We see number one top gainers giving back gains. You know, the whole Taylor Trader, and we brought up today in chat the whole 10 million volume thing where we see 10 million volume and it gives back gains. We're looking at that a little bit more. But again, regardless, this is what we're seeing a lot of the time. Number one top gainers giving back gains, whether they spike in pre-market or in the market, and then they give back gains. Now we see this kind of what I was just going over. We see stocks spike way more in pre-market, right? And we see a stock go from like say 360 or whatever it was up to like $5 area, 450, whatever. But the main thing is it spikes. Let's go back just to see. Let's see pre-market run. See, look at the spike. You know, it goes from like say 2 up to 275 in a quick haul, quick little manner. Overall runs more, right? And there seems more spiking at times with way less volume in pre-market or after hours the day before. And then you get to market going, okay, this is spiked up to, the $5 area. Let's go. This is going to rock and roll, right? Volume's going to come in here and it's just going to go bananas. And then it just does this, kind of fizzles off. But there's still areas to take your trades. Trend lines. And this is a nice, slow and steady trend line, right? Get your bounce plays in. But no, the more we bounce, right, team, as I was just going over multiple times in chat, the more we bounce, we're after the 3, right? Starter. This is essentially our third bounce where we know we could have got in here. Maybe if this is our first bounce, because this is the starter area, we put it in here. Didn't get that bounce, so we got this one maybe for the first full bounce, that was trustworthy because we have the trend line in now. So you trade these, right? But no, after this one right here, we're getting super risky biscuits. We know because we have not pushed and extended through 5. We see some upper shadows here. It is, again, it could fail easily. Yes, creating higher lows from where it fell down to, but we have all these upper shadows. It's not bouncing real far off the trend line. Okay, so if you got your bounces in, or maybe you didn't. Maybe you just didn't like the bounces. They just weren't big enough for you. You just didn't trust them. Go for the short on this. Look at this immediately, and it's one of those ones where you just have to market order and you don't get that. It kind of falls below it. Okay, I think this one's going to open and close out of it. This is just one of those immediate, just nasty trend line cracks, sell-offs, right? Whammy, right on down. And you got filled anywhere in here. 425, 430. Pulled the trigger and you got a bad fill at 418, 419, whatever. Look at the trend line crack. Beautiful. And notice how a lot of these stocks too, I think it was Canyon Black we were talking the other day. What was that? EOND or EOMD, whatever that E-trade was. I think it was last week that spiked up to 910, whatever it spiked up to, and just continued to collapse. And I was like, you still holding that short? The next day, of course, he was already out of it. But, I was like, hey, that would have been a great short because we've seen these stocks spike and then essentially just fade back to where they start their spiking. Again, crazy how we'll see this. Goes from, on news, the 125, 150 area essentially is where it really starts spiking. 150 straight up to 6 and like 4 candles. 4 candles. 4 minutes, it's from 150 to $6 on the dot. Of course, nasty upper shadow on top of the hill, so it fades back, right? So we notice this in pre-market. What's going to happen in the market when we have this straight halt up and this opens and forms this upper shadow? And I have not gotten to do that yet, but this is where I notice when stocks do this in market, and it's been that failing mode, right? We're not in that spiking mode. We're more in a failing mode recently, right? You're going to see this. If you see this in pre-market, you're probably going to see it again in the market. And essentially, this is what we get. Another U-shaped break of the VWAP, and we finally reclaim it. Spike with the opening bell. Okay, we get what we want, right? It's up a certain amount. Okay, we finally get that volume and spike. But as soon as this opens and forms that upper shadow, right at $4, I know Neil, I hadn't seen him in a while, but Neil in chat, Deck in chat, any top, Mel, all those shorters that like the tops, Taylor, whoever like the tops, a lot more of you than me, there's where all of them would have been getting in at. So short, those are short areas to short, right? You see a nasty upper shadow on top of the hill. No, you're not in it for, literally right at the $4 area. You're probably more so in it around the 460s, 470s. You see it, you pull the trigger. Here we go. Here comes the nasty sell-off and it's halting down. Be a safe trader like me and go I'm waiting for my trade if you want to wait. Although a lot of these trades sometimes I'm like, if I don't like the stock, I'm not going to take it, but you still can. Look how the stock bounced perfectly off of the support area. Now, even if you got in here, say, this area is a little bit, you got in a little higher, you're still fine. It bounces close to the 225 area. Go ahead and just call it that, 220, 225. This runs right back up to the 280-ish area, over 275, but close to that area. So close to a 50-cent move. But slow and steady. You get your volume surges at times. Right? Do we not? And then things just kind of simmer off. They simmer down now. We'll have those trades that are spiky, and they kind of just go crazy like ORPHs. But get in early, because the more those start halting and spiking up, it's my point, right? It'll have those moments of volume, but then it's just going to simmer down. So find your areas, be nitpicky. Again, a play that goes from $1, this is a different one, but this goes from 170-ish area up to 711. You kidding me? And that's after hours. That's after hours, right? Right with the news and after hours. Let's get so you can see the time frame of this. Again, another one of these from last year was just a little bit slower, and we're seeing the same thing. That's why I love showing you this. Isn't just the first time this has happened to me. This is going to continue to happen, throughout the history of stocks. It's just going to happen this way. So again, what do we see there? Well, let's break it down all the areas you could have traded this. Say in pre-market. You see these crazy overextension runs, team. Here's your first trend line, right? I could have put a trend line in right there. Yeah, nice, slow and steady trend line, and then whammy, we're off to the races, right? So this is your trend line 1 that I could have, anyway. When we start forming trend line 2, and it looks like, I'm telling you, team, just put it in. Because look at the short to be had. You're in here right around, God, I wish I could see what area that was. I don't think I can. But you're in right here, that's 7-11, I'm guessing that's $6.50, right? It's probably every 50 cents. I mean, you're immediately straight down to $6, and boom, you're down even further, right? So short the trend line crack. Be a patient stock trader. Start putting your support line in. So when it finally found a base and then spiked back up, okay, well, that area, and I could have extended this line. I just didn't want to make it too cluttered. I could have extended that right over to this area where it kind of was bouncing from before. Bounce right there. Okay, be like me. I'm not a pre-market trader, right? Wait for in-market. Now it's forming another trend line, has said support line for below. Whether you went for the trend line crack like I did, or you went for the bounce play. Either way. Small little bounce here to be had. Trend line crack. beautiful to be had. You have to be super precise always in stock trading, right? It's just kind of the way it is. It's the nature of the game. But when it comes down to slower market conditions, at times, you have to be a little bit more precise because it's slower. You got to get in your trades right. You want to be in at the right area. Now, of course, when it's a slower trade, you don't have to be super precise because, if it's a slower trade, you're not worried about it because it's maybe only going 10, 15, 20 cents. So it's not like it's going hot plays that go like ORPHs that go from 18 to 30 to 45 to 70, or whatever. So that's why I take advantage of this slower period here. Any newbie trader having trouble, wanting to kind of start going live maybe, this is your time to take advantage of slower plays. Yes, you have to be a little bit more precise of where you want to get in because it isn't moving as much, so you want to kind of maximize that profit, right? But again, your losses won't be nearly as big either. But find your areas of support. Find your trend lines. I love trend line cracks. Taylor Trader's mentality, like right here, it's having that big momentum again at the opening bell, right? Spiked in pre-market or after hours. That's another one of his mentalities. Especially last year on Fridays, it's kind of been a little bit less lately because we haven't gotten the spikes, hadn't been as hot. But that number one, say, top gainer on the day, you could have been right at the opening bell. Now it's up and down. That's why I don't like trading the opening bell. But you easily could have been here somewhere right before the open, like, say that Taylor Trader mentality, it's working its way up. It's essentially the number one top gainer on the day or close to it if it isn't. If it's not, like say name number two, but at the time it's actually uptrending and say maybe the number one top gainer is kind of downtrending at that time. Regardless, you get in here somewhere before the opening bell for what? That surge, that spike. So there is that mentality, but it's a little bit riskier, right? Because I don't want this to fall off on me. So even if you just want to be safe, wait for your trades to come to you, team. Just wait for them. Again, look how often we see these in the in the pre-market or after hours. A lot of the time in pre-market though, where we get finally that next morning surge and it sees that crazy spike, right? Those upper shadow flags you're going to see in pre-market, I see them so often. I just don't trade pre-market and I don't trade tops like, I can get it in and again here I can't just market order in like seeing an upper shadow and then pulling the trigger and getting in, right? But again, look at the upper shadow that was formed from this. I'm sorry, a third stock in a row I'm showing you go from the $1.50-ish to $2 area all the way up to the first one was $6, then one was $7, this one's all the way up to $8. You're moving $4, $5, $6, $7 in a matter of say 10, 20 minutes. This cannot hold. I mean, yes, we're going to see some go to, but again, when you see the upper shadow, they're not going to. Wherever that upper shadow forms in pre-market, it could be 10, could be 12, it could push all the way to 20. But when you see this nasty, and this was $1 upper shadow, I mean, this upper shadow is $1. Get on in. It is going to collapse. And look how this collapsed all the way back down. This went from, you could have got in, even if you didn't get the upper shadow at 7, you got in, say maybe it's, I didn't pull the trigger, because of limit ordering, whatever. Got in the $6 area. No one, okay, AK said, crazy upper shadow. No way this is even going to hold. It's going to collapse more. Most times not, and it usually does, right? And it falls down. Look at the area you fall from. I mean, even if you got in at the trend line crack or this wedge crack, you could have gotten in at, say, like 570-ish area, 560. I'm pretty sure you wouldn't happen like when this falls all, if you held that long, it goes all the way down to 2, right? So, and then look how the old trend line up almost holds as resistance. I don't think it quite got to it, even if it did spike back up in that area. Why we keep the old trend lines in. Again, wait for your bounce play. Look how this comes almost back to the open. It pushes almost all the way back to 5, right? So you don't always have to be, in with the crazy momentum and volume. You can get in on these small bounce plays and just wait for them. I could have drawn tons of lines in on this one where you could have got in on other bounce plays, right? It's just, again, or trend line cracks. I see a beautiful, there's many plays for you just have to be patient. That's why I put this in here. Sometimes lately, waiting game is, equals patience. It pays off to be just a wait. Not forcing those trades in pre-market maybe or at the opening bell. Wait for your trade to come to you, get a 10, 20, 30 cent trade in, lock your gains in. That's what I thought. I thought I put more in here. But old resistance, equals new support. Wait for your, okay, it's got Josh, AK says Josh has got the mob, got the fight. Hello, here's when the mob moves in, right? How to notice when the mob moves in. That's my, because it correlates good with this one. That's my lesson for this afternoon. Kind of noticing those areas. Area 1, okay, I think the mob's moved in. This had this weird halt for a while. I remember this trade from last year. So the volume kind of died off when it, but look, gapped down and still recovered. And when it recovered, look at the volume. It's twice as high as it was on the first surge. Thus, AKA, it has got the mob. So wait for that mob to come flying in and get you a bounce play, right? Find a breakout of old, if you like love finding these like almost flags, how it creates these little downtrend flags and then pops above them. Downtrend flag, crazy pop above it. Downtrend flag, crazy pop above it, right? So notice those areas. Whatever you like trading. I'm not a huge breakout buyer, but it's the opposite of trend line cracks, right? It's essentially just a downtrend break, but you put that line in, how severe down that is, and when it soon starts breaking above that, say if you're in even 4 here, whammy right up to 4, almost 90, whatever that is, this area. Same with here. You're in at the downtrend break or the flag break, essentially, at around the 450 area, whammy right to around the 525 area, and essentially one candle. So have your strategy, whatever you like trading, whether the downtrend, cracks like me, or I should say the trend line cracks like me for a short. Like downtrend breaks for a buy and a long, like day trades, bounce, just whatever you like doing. Find your niche and then just alter it, adapt it, adjust it, right, to these slower times. Even if we do get some spikes, that didn't do too crazy, right? Oh, it's gapping up a little bit. It's only up from like say $1 up to $2.50. Nothing too crazy, right? I guess this would be a little bit because it did close it around the $1. No, it's $1. That's a little above $1. So probably still up 100 maybe percent on the day. And still get a nice little move from it, right? The little gapping go, hits a high of up to 676. So where to break this trade down, right? Wait for, again, your trades. Even if they're smaller, you don't get into this crazy explosion from 250 up to 450 almost, 475, 490 actually, yeah, almost up to 5. I love when you get these overextended lines. It could have been a good downtrend, or I should say trend line crack, because it's so overextended. And would have been a quick one because it did hold the VWAP, right? And that's the area where you really need to start locking it up when you see it bouncing if you went short there, because at the time really didn't draw that in. But I love these, and I showed it earlier. Whatever it was didn't come right down to it. I think it was LEDS when it was overextended, and just wait for it to come back down to some support. Sometimes it will, and sometimes it won't. But find that lower support area on an overextended move to say, 490. If this pulls back all the way to the VWAP right here, which is the 370-ish area, that's $1 pullback. That's nice. That's huge. And then in the end, we get close to a, 75-ish cent bounce from that, close to it, maybe even more. So again, just be patient. That's why I like to see this one. And it didn't come right down to it, right? It just didn't come down to it. Old resistance, though, equals new support. I love this. This is where I could have got in. And again, just if you want to start scalping plays. Overextended move. It's well overextended at this time, at least from the open, it's getting overextended because here's the trend line, right? Here's the trend line I could have put in. Now we're pushing up off of that, forming almost a new, steep, uptrend from here up to there, right? So when you get this push up to 550 and it comes down and then surges all the way up to 650, a dollar pullback is going to be beautiful to be had, and you get it right here. And then you get another push to high of day after that. Yeah, next ML. And we'll get it. I mean, we haven't gotten it too crazy recently in pre-market, but yeah, just notice I'm just showing you those to just show you how stocks can spike in pre-market and then just fade off, right? And then again, still sometimes get moves, and if they do, even if they're not big moves, to find your trades in there, right? Like here's one, finally. Something that really maybe like we've seen, doesn't do anything in pre-market, but then goes on a somewhat of a move in the market. We see as night, like say kind of like Gurn, right? Doesn't do anything in pre-market. And then here in the market, we get a nice little slow and steady uptrend. Put your trend lines in, right? Look at this. I could have extended that one, but put your trend line in. Double trend lines, overextended. Look where this bounce came in when you came back to the trend line. I don't know why I put 2 trend lines in and didn't extend that one, but that was an AK error right there. That's an AK error. Beautiful bounce though, right? Off of the trend line. Overextended. Well off the trend line. 290 up to 350. For a slow and steady mover that was squeezing, going from like say 280 up to 310, 280 up to 310, 280-ish area, boo, 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 boo. Finally squeezes, right? 2 things be had here. I didn't even put it in because this is when I wasn't doing it nearly as much, and I forgot to put it last night. Look at the trend line crack to be had. Look at this. Overextended, offset, and I love these. You have your normal trend line, right? Your normal, just not too crazy of a steep trend line. Then we start overextending off said trend line, and it starts forming a steep trend line right here. Look at this. When that cracks, and then it did around the 340 area, and that's fine. Look, it pushed right back up, which would have been right back up into that trend line. Failed there again. That's why that's my stop loss, and then whammy right down to the 305-ish area. For what? A beautiful bounce. Back and forth, team. Back and forth. Go long. Go short. Go short. Go long, right? Take your bounce plays, even if it is just a 305 bounce back to the trend line finally from a push up to 360 area, 365. Or no, that's 355. 355. 320, there you go. Up to 330. What was that? Up to 330 really is probably where a lot of traders would have been taking a lot of their profit, right? Maybe even some of them would have been taking them at the 320 mark, seeing some resistance from before. Take your 15 to 25 cent trades. Again, back to the trend line bounce. Okay, wow, we're really starting to bounce. Here we go again. Okay, I'll jump back in a little bit smaller because we're really extended off of this. We're getting really high off this trend line. Keep bouncing, not extending too much. Again, look how many times. And then finally, that's why the more you go and the more you go and the more you don't push to make new high of day, you see the bounces getting smaller and smaller, and then finally crack. Held up. You can see here at the 310 mark from before. Could have been another great bounce opportunity right here. Look. Off of old resistance equals old new support, right? Could have been another bounce. It's just showing that, just showing you. Then another trend line. Here we go. Another trend line, right? And so again, play the trend line. You're just putting your lines in essentially in these slower conditions, finding your areas of support and resistance and just taking them as they come. Same right here. A push from I wish I would have put that in. See a little clearly there. I think I do if I scroll over. Nope. Unfortunately, AK cut that off. But a nice push right here from whatever, say we'll call this say $1 up to say 2 or 3, right? Whatever this nice move is. And we see a bounce. No, it's just a bounce. How traders came in, bought it back up, see the news, whatever, want to keep pushing it, right? So we know this area A later on, and it may not be for, 5 hours later, literally. 6 hours, 5 hours later. 5 hours later. Look at the bounce. Could be a moving average. Could be support from pre-market. Sometimes the VWAP. Wait for whatever the support is that has not been tested for a while, right? 5 hours, this support hasn't been tested? I'm telling you, team, you're going to get a bounce. And then you get awesome little staircase all the way, back up to test the high of day area in pre-market. From a low of day bounce in the market from this in pre-market. And again, quick little trades to be had. Resistance, that quick run up. So we know this upper shadow, it didn't even form an upper shadow, but that resistance fell into, came back down. Look what happens later on. Off of this little close of the candle that collapsed and fell back a little bit, kind of pulled back from the first resistance area it saw. Bounce 1, bounce 2, bounce 3. Now we're done. After that third one, I'm telling you, team, after bounce 3, be careful. Could get bounce 6, 7. You could. Definitely getting riskier there, especially when we're not pushing, right? Back to Snap when we were trading Snapchat. Short the trend line crack. I love these trend line cracks. They are so beautiful to be had. And there's so many bounce plays to be had too, but I'm telling you, team, when you see a move that the line looks like this. Now, sometimes it doesn't have to be $7. It could just be like this, $2. It could be 50 cents. The line could look like this. When you see a trend line that looks, more so horizontal, going to last a little longer. When you see a trend line that lasts like this, that is super steep, after that second, third bounce, it's going to get cracky. Thus, beautiful short opportunity. And let's just get into it, and there'll be the last little slide to look at for the day. ORPH, back to the original where I got in this morning. Has this said trend line, right? Now we start forming crazy overextended, not crazy, but look at that line. That line is so straight up when that cracks, whenever it cracks, and that's all I'm waiting on. I'm a stock sniper, right? I'm being patient. You have to consider yourself a stock sniper if you want to aim at these with passion to get in correctly. You've got to be serious. Imagine yourself in a sniper. It's World War II. It's 1947. 47. I think the world was over by then. I think maybe it had troops over there. Maybe anyway, 1944. Let's go back to in the middle, heart of the war. 1945, 46, whatever. Or it's, I don't know if they had snipers back in the 1917s for World War I. It's Vietnam. It's the 60s. Whatever, right? You're a sniper, but you're like on it. I mean, maybe a cool sniper. Like, hey, you just sit there with no edge. But most time, 9 times out of 10, those boys were in there just waiting, right? But also like, trying to compose. They weren't up there going, they're just up there just waiting, just chilling. Composed as can be, waiting for their move, just waiting. And that's all I was doing on this. Now, this could have moved up to 10. I do not care where said crack comes in. Now, I do like the higher it goes, the better, right? Because the more this pushes, the higher it has a possibility for a further crack down. But I just was sitting here in my tower, saw the overextended move, so the troops were starting to move in. I'm like, oh, here they come. Got them. All right, now I've got my my AK-47 out. That's been specialized into a long arm, high powered rifle that can literally hit objects up to about 7 miles away. Yeah, 7 miles away. It's crazy. I got it from Optimus Prime. He hooked it up. Anyway, so I'm just sitting there now. I see the troops moving in, right? I see my targets coming in. And I'm like, okay, now I'm literally my AK-47's long arm specialist. It's locked and loaded, barrels out of my little tower. I'm waiting. I am just barrels out, as in my finger's on the trigger button, literally, right? My finger is on the buy or sell. Well, of course, you know what I mean, whether you're buying or selling, whatever you're doing. But it's sitting right there to get in when I need to get in, ready to pull the trigger, blow a couple of heads off, right? Whammy. It's boom. And I was alerting in the chat telling you guys, whammy, pulled the trigger right then and there. Hey, I'm in at the, and it wasn't a good entry because I was trying to alert it because I said in chat earlier, I will alert if I get in ORPH for the short. So I didn't pull the trigger right away. I was trying to alert. Here comes a trend line crack. Boom, pulled the trigger, was in. I wasn't into like I said, 873. 873 was entry. So I could have been even higher. That's fine with me. I don't care. I know this is going to collapse. This trend line is so steep. I said scale out area number 1. There was an 830 area, and that's where I got out first because I saw this bounce area. Could easily try to bounce there. It tried, and it was done when it came back down to the $8 trend line / VWAP, and I was out completely there. Now, that's it. Boom. And if it collapsed more, I'm not going to cry and go, oh, I should have held the 7. I'm not worried about that. Got in quick, in and out, slower market conditions. I'll take my $500, $600, whatever it was for the day. I'm done. I'm good with that. I'm happy. Don't force yourself in the little bit slower times. Be a stock sniper, sit in that tower with your specialized whatever you want to shoot or whatever. It could be a water gun because you want to be a lover, and that's fine. I'm a lover too. You get my point though. But you're just waiting to shoot those love hearts, or you're real right, whatever, and you're just waiting. Stock sniper, be precise, find your area, be a robot. In fact, pull the trigger then, or have the limit order set there, then trade it from there. Stick to your stop loss, stick to your targets. Call it a day, once you get up to a certain amount. Don't keep continuing to try to trade in slower times. It's more of a scalping mentality, really. Hopefully that helps out as far as, how to trade in slower market conditions.